Hey investors, Dave Hathaway. Welcome back to another Deal Day episode where each week we look at a new property in a new market to determine if it makes sense as an investment property and if we can't find some dang good rental properties. If this is your first time on the channel, welcome. We discuss real estate, investing, and how to build wealth. This week, we're actually going to look at the market of New Orleans, otherwise known as the Big Easy. Fun fact, I love New Orleans, so I am rooting for it to have some amazing investment properties, hopefully. What we're going to look at today is 5521 Bentley Drive, New Orleans, Louisiana, 70126. If you guys haven't done so already, please give us a thumbs up on the video, subscribe to the channel. It really helps the channel grow, it helps us bring on great guests, and it helps you become better in real estate investor. So moving on, we always like to look at the market before we look at the individual property. New Orleans has a population of 364,659. It has a growth rate of negative 1.65%. That is not good. We never like negative growth. It peaked back in 1960, and now its population is halved. So that is a really bad sign. That means people are leaving the area, not coming to the area, and that negatively impacts values. The job growth is 1.01%, which isn't terrible, but definitely not great. Unemployment's 3.7%, which is slightly above the national average. Average salaries are $65,714, which isn't bad at all. I actually think that's pretty solid. The median sales price is $325,000. That's good. What's not good is days on market is 96. On average, properties spend 96 days on market. That might be the longest days on market I've seen in a market that we've done, and I think we've done about 25 different markets. So that would concern me a lot. And what this means, investors, this means if you put your property, if you list it for sale, on average, it takes over 3 months to sell. And that is fundamentals of not a healthy market. Average rents for this market are $1,700. They've decreased $100 year over year. So last year you could rent your property out for $1,800. This year you can rent it out for $1,700. So this is another really bad fundamental. All of those fundamentals are not good. I'm going to give the market a terrible thumbs down. Hopefully we can find some properties that make a ton of sense, but with all those market indicators or market fundamentals, they are bad. Let's look at the Google Street Views test. Looking at the area where this property is, you can tell this is a really nice neighborhood. The Google Street View is from 2013. Looks like there hasn't been a Google Street View since, so I'd be a little bit weary of that. Sometimes you get what you get, but it looks like back in the day or back in 2013, this is a really nice neighborhood. The cars are nice, the sidewalks are nice. The only thing that sticks out to me is if you look across the street, you see big old power lines. Now, I don't love power lines. They definitely affect overall sales price of the property, but this one's listed for pretty reasonable. They normally don't hugely impact the rent. So we can still find good renters, and if we can rent it out long term, we'll see if we can make this property make sense. But just know down the road, if we were to purchase property and sell it, we're probably gonna have to sell it for a semi-discount because it's so close to those power lines. Moving along to the listing detail. This property's listed for $129,900. We love those numbers. That's low in the United States. It's a 4-bedroom, 2-bathroom, single-family property. Love that it's got more than 3 bedrooms. It has 2,200 square feet, which is decently large. It was built in 1960. And when we look at the listing pictures, first thing I notice is I'd be fixing the garage door. You can tell it's a little bit bent, so it's probably busted. I definitely do some landscaping around the front of the house to bring the house back to what the Google photos look like. Right now, it just looks like hugely overgrown bushes. You need to cut those back. This is a low-cost fix, but a high return on value. And I'd like to do something as close to zero-scape as possible. Just like with any rental property, you don't want to put lots of plants that are going to be high maintenance, meaning you have to trim back every year. You want to buy slow growing, low to the ground things that don't have extensive root systems. But these are going to be different plants in different areas. I have not lived or am familiar with plants in Louisiana, but you just have to cater to that market. Moving along to the kitchen, it looks like you're going to have to put all new kitchen cabinets. You're going to have to put all new appliances. I'd go with stainless steel. You're going to have to put all new bathroom vanities. So either this house was flooded or somebody just ripped all these out. Regardless, you got a nice clean blank slate, which I actually really like. House has some amazing details. You can see all this like trim and this molding and the vaulted ceilings. You can tell this is just a really nice property, and the house has a lot of charm. So I just keep that charm there because that's going to attract tenants and it's going to give you a higher sales price. Moving along to the rehab budget, I would budget for about $10 a square foot or about a $20K rehab. Moving along to our cash flow analyzer that you can download free if you go into the comments of this video. We're estimating you could rent the property out for about $1,400. We're estimating the property taxes at $2,061 according to Zillow. And if you look at the cash flow, if you purchase this property in all cash, it looks like you're going to make about $816 a month or 6.37% cash on cash return. With a loan, you're going to make negative $1.92. So you're going to make $0 if you have a 30-year fixed loan. I don't love that. And I don't love the cash on cash return, 6.37%, especially when in money markets you can get 5% right now or a high yield savings account. So I don't love those numbers. Rents are super low in Louisiana. So that's something you have to be a little bit weary of. And that makes sense thinking about the population continues to decline. So that means you're going to have more competition when it comes to rental properties. So you just have to be very careful where you're purchasing and make sure you're purchasing at a rate that you can make money each month. We did also look at the market fundamentals, and medium rents went down $100. So you always want to be cognizant. A lot of times you build a lot of value and wealth with each year your rent increasing. So if you purchase in an area where rents are decreasing, this is going to destroy the value of the properties, as it looks like it has, because this property is listed at $129. Overall, I'm going to give this property a thumbs down. So this is a thumbs down verdict for the market of New Orleans. This is a thumbs down verdict for the property, even though it's so cheap and super charming. I really wanted this to be an awesome rental property. And we didn't even go in to factor in like higher insurance costs, because this is a hurricane area. And just the stresses that come along to, hey, there's a huge hurricane that's about to hit the coast. That's going to be stressful if you had a bunch of properties in this market and you have this huge hurricane that's going to hit every year. So I'm just going to say, go ahead, pass on this market, try to find a better cash flowing market. Please give us a thumbs up on the video, subscribe to the channel. It really helps the channel grow. It helps us bring on great guests. We'll see you on another deal day.